Well, I think you got it right. The January 5th minutes, that was the December 15th minutes that came out on January 5. They were a shock to investors. And I think what really shocked everybody was QT. I mean, we all knew that, and they had prepared us for reducing their bond purchases and down to zero by March. And they also prepared us for at least 3, maybe 4 rate hikes over the year. But what came really out of the blue in the minutes, or at least the market took it that way, was that they were actually going to let their balance sheet run down. Now, think about it. They used to buy 120 billion per month last year in the bond market, and now they're talking about not doing that anymore. And on top of all that, I estimate an average over the next year, reducing their balance sheet by 95 billion. And the markets are really worried about whether the Treasury market can absorb that.
Is it well-found worry, or are we overdoing it, Ed?
Well, I think it's definitely a taper tantrum. It's pretty nasty. I mean, we've had nasty taper tantrums before. We've had 3 altogether, and the nastiest one so far was the one back in 2018. But this one is probably going to be as bad, if not worse. Yeah. Somebody asked me
I just want to point out,
yeah.
this is nothing like a taper tantrum. You have a 10-year hanging in there at 173. This is the market reacting, but the thing the Fed ultimately cared about with the taper tantrum was the bond market, liquidity drying up. That was a dangerous set of situations, but I just think it's a little bit off base to compare this to a taper tantrum, at least in the bond market, which, as Rick Santelli points out, is behaving very well despite what's going on in stocks.
I didn't finish my thought on this taper tantrum. I think the big difference between this taper tantrum, if you'll allow me to call it that, and the previous 3 is that this one, there's no backing off on. I mean, the inflation problem is a problem. I mean, they can't do what they did in May of 2013, early 2016 and 2018 and say, okay, we're going to talk more dovish now. This time around, they have to continue to talk hawkish. But with what the market's doing, I think they're going to have to take it a little bit easier on the hawkish talk, especially since the market definitely freaked out over QT. And I think clearly in the press conference, you're going to be asking, and the other reporters are going to be asking, what is the deal with QT? Aren't you concerned that you've overdone it, that you're about to make a policy mistake, that's what the markets are saying?